Good morning everybody and welcome to this Smart Charts European session. Hope you are all well. Let's dive in and get an update of the latest market headlines and potential trading opportunities to focus on for the days and week ahead. So we're getting through the different economic news announcements as the week unfolds. We're getting into some of the higher impact news announcements with the FOMC meeting minutes release and the US inflation numbers coming out towards the weekend. So we'll keep an eye out on these announcements and see if there's any themes that we can participate in, any surprises which can cause a lot of volatility in the market. Of course, exercising risk management as well as we get into more US dollar focused news announcements where a lot of the flows have actually been, so making sure you're not too overexposed on your trading account to high impact news announcements coming out. So let's see how these news announcements unfold, what kind of flows that we get from the market, and I'll do my very best to highlight any trading opportunities in these webinars. But make sure you're tuning into all the other live daily trading webinars to capitalize on all the intraday lower time frame trading opportunities, which is really where the flows of the market are right now. So let's get a quick update on the daily headlines and then we'll dive into smart charts and see what's going on there. Okay, so first of all, overnight we did have the RBNZ, the Reserve Bank of New Zealand, cut interest rates 50 basis points from 5.25% to 4.75%. A second straight interest rate cut, and it was widely expected. Now, we actually did have some weakness in the New Zealand dollar, as many of you know, regular viewers. We've been trading the Kiwi weakness for quite some time. It all started off last week with the volatility reversal trade, which is the strategy we use on the trader certification program for trend reversals and ranges. So we had that on the higher time frames, and we had the sell off in the Kiwi, in particular against the US dollar. And it's been beautiful on the faster time frames. We've been trading the fast time frame strategies, things like the pip runners on your trader certification program, or 20 bounces on Master Trader. It's been fantastic for you fast time frame traders, because actually when the market goes down, it goes down a lot faster and steeper than it goes up. So actually any downtrends are really good for fast time frame traders. So in this instance, we'll keep an eye out on any further weakness in the New Zealand dollar, in particular because we had the HSBC chief economist actually say that the central bank is likely to cut interest rates another 50 basis points in the November meeting. So this may pressure New Zealand dollar to the downside. It's a bit overstretched right now because we've already been building positions, well, the market's already been building positions for the news announcements that just happened overnight. So we want to wait for a bit of a stabilization period, a bit of profit taking from the short sellers, but then we're looking for that Kiwi trend to continue to the downside over the longer term. So we'll keep an eye on any flows regarding that. In particular, pairing it up against the Aussie might be a key one to keep an eye on Aussie Kiwi, because we know the Reserve Bank of Australia from their meeting minutes are keeping interest rates on hold, okay, and don't see any important reasons to cut interest rates just yet. So that might help to stabilize Aussie against the Kiwi, and we'll go into smart charts. I'll show you a chart of Aussie Kiwi and why it's one to actually keep an eye on for potential trading opportunities when they do arise. Now, we also had news that the World Bank says China growth rate will drop next year with weak consumer demand, property market woes, and aging population, and they cite doubts over the recent stimulus actions that has happened. Now, that recent stimulus announced by the People's Bank of China did cause a huge rally in the Chinese stock market, the Hong Kong Stock 50 stock index, which we highlighted, some really great opportunities there to the upside. But since they've come back from the long weekend, we've had a massive collapse really in that. So again, this is more bigger picture stuff really, and it's important even if you're not trading Chinese markets directly. What happens in China does have a big impact on the Aussie dollar, because China is Australia's largest trading partner, and when China is growing, they need materials, resources to grow, and a lot of that does come from Australia. And so sometimes when the Chinese economy is flying higher, it can help put a bid in the Australian dollar. But these are things that are happening over a very long period of time. Right now the market is more focused on interest rates, and interest rates have the most important impact on currency trends. Other things do as well, but right now, because everyone's cutting interest rates, holding interest rates, that's kind of where the action is. Why is that, by the way, for any new listeners? Well, interest rates have a big flow on currency direction because interest rate differential strategies being done by institutional money market fund managers. And this is basically where money market fund managers will borrow money in a low interest rate country, and they'll go and park that money into a high interest rate country, and they'll pocket the difference between the two interest rates. So of course the flows from one currency to another currency to get a higher rate of returns has a big impact on the flows of the currency markets. Now, we also have the FOMC meeting minutes release coming out later on in the day, and the US dollar has stabilized. We've had some really big moves in the US dollar, most particular Aussie US, Kiwi US, crashing lower, okay? But it has started to stabilize. So we already have a dollar trade on. So for me, I don't want to be too heavy. We've had some good dollar trades this week on the fast time frames, but it's short-term trading. We're out of those, and we just have one more longer-term dollar trade running. And for me, that's okay as an exposure coming into the FOMC meeting minutes release tonight, the US inflation report tomorrow, because it can be quite volatile. We're already starting to see some of the faster time frame dollar pairs already start to lose that time frame agreement as it just goes a bit sideways ahead of these releases. So again, listening to the market, protecting your portfolio is a number one key part of risk management, and lasting in the market for a long period of time, okay, consistently and successfully. Now the markets are pricing an 85% chance of a 25 basis interest rate cut in November. So let's see if there's any changes in those expectations, which could cause some more flows in the dollar, the dollar rally that we have been trading. But we're just in a stabilization period. We've had some really big moves on the fast time frames. We just want to wait for things to stabilize and then maybe get things going again. But this is where sometimes in the currency market it gets a bit rangy because you've had some big moves, and this is where maybe the speculative flows go into stock markets, okay? And we already had some really good trades there on the S&P, the Nasdaq yesterday, on the twin flips. We'll get an update as well on those when we get into smart charts. So being a multi-asset class trader can help diversify your portfolio, diversify your risk, as well as your opportunity flow of what you can find in the market to trade. So let's dive into smart charts and actually let's get an update and see what's going on. Okay, so first of all, let's just get a quick update on what we've been doing so far. A couple of things to keep an eye on as well. So as I just highlighted, okay, the divergence between the Australia and New Zealand central banks becomes quite interesting for Aussie Kiwi, and we will be looking to see if we can get a nice little run on Aussie Kiwi to the upside, because it does go on some very nice runs. If you zoom out here, we had a really nice trend off the moving average zone, so we're going to be keeping an eye out for a really nice trend off this moving average zone as well, okay? And so with the expectations regarding interest rates, it does seem quite compelling for Aussie Kiwi, but we still need to wait for the right time to execute a trade as well. So we'll keep an eye out on the different time frames for potential trading opportunities, and of course I'll do my best to highlight any trading opportunities in these webinars, but make sure you're tuning into all the intraday live trading webinars to capitalize on all the flows from the lower time frames and other asset classes as well. So with a quick update on what we have been trading, I mean, we started off the week really with those sell-off in the commodity currencies. So you can already see how I said earlier on, sometimes when the market goes down a lot faster than it goes up. You can already see on the 4-hour chart here on the left-hand side, not that many phase 2 pullbacks, okay? Just a lot of bars just going down, which is why it's perfect then for your faster time frames like the 15-minute charts, where we're just now trying to look for short positions in the sell zone, right, the moving average zone. But you can start to see on this whole way down, we've now finally started to break the moving averages. So we need to wait for the trend to sort of reset itself, okay? So we've been trading a lot of obviously Kiwi US, Aussie US as well to the downside as well, because we've had a nice sell-off here in the moving average zone, the sell zone. But what do we notice? Look, price is now starting to break that moving average zone. So in this instance, we just want to wait for a bit of a stabilization period, okay, on some of those dollar pairs. But you've had a good run on those, okay, and if you're lining technicals and fundamentals, any master traders, then there's been some really good high reward to risk trades. These early ones getting that really high reward to risk, because we've had the fundamental narrative on the weakness in the commodity currencies with the interest rate cut for the RBNZ, but also the strength in the US dollar with the trend reversals that we have been trading on the dollar pairs. Okay. We've also highlighted an opportunity on Euro US dollar as well, a bit more of a longer term trade for the higher time frame traders, where on the twin flip strategy, price actually came into this long term support level here, interaction point. We had this confluence of levels, all these different turning points here that had developed in the market. This angular price here, you know, we're in the moving average zone, buys turn up in the moving average zone before. We're trading at the bottom of this potential trading range because a lot of dollar pairs, big picture, you know, have gone a bit sideways, but this could be a stabilization period before the market does continue and move higher. So we've positioned ourselves for that, but it's just gone a bit sideways, okay, which is why we can already see the dollar pairs. Whether you're a higher time frame trader, lower time frame trader, you can start to see the dollar's gone a little bit sideways, getting a little bit more strength in it. So we're just going to be patient, wait for a bit more of a stabilization period, and then, you know, look for some continuation of some flows. But it's been particularly good on US stock market indices actually. So yesterday, we know we've been long on stock indices for quite some time because all of them are going up in uptrends really. So we're just looking for the trend continuation. So again, you know, we had this nice trend to the upside, and you know, we broke that trend, okay, and we had this sort of stabilization period here, and then we just waited for the market to sort of break out that side outside of that stabilization period and just look for another trend continuation. So we did get that. If you recall, last week, remember we had this little range here, and then price broke outside of it, and we had the retest of that, and we said, okay, this could be the first higher low of this move to the upside that we're looking for. All right, so we had a trade there, and that was a losing trade, and not enough buyers. Well, some buyers turned up, but not enough to continue to move at that point, so that's fine. But then price had come lower, and yesterday we had a chance of a re-entry, okay, because now price came to this lower moving average, this blue line where buyers have actually turned up before, and we had this angle to price, and we actually had now a better structure to focus on. All right, so that was a way to get back into the move. And this is going to happen sometimes, okay, because you know, we trade multiple types of trends: momentum trends, long-term trends, corrective ABC cycle trends. You know, we have strategies, we look for opportunities on different types of trends. So sometimes what can happen, you know, you take the first trade here, okay, that might not work out, but it comes into a longer term level where there's a chance for a re-entry. Now, if you're struggling, okay, to take that second trade, then you need to be speaking to your coach and mentor, right? Because then you're probably trading a viewpoint, you're probably trading your expectation, you're probably trading an outcome that you feel you are certain in, but actually you should be focused on being a probabilistic trader, trading the probabilities, okay? So if you're doing all the work from the trader certification program, the back testing, forward testing, training and conditioning whilst trading, then this shouldn't be an issue. You should be able to take this trade here. If it loses, you should be able to take this trade here, because you're just following your setups, okay? But most retail traders will struggle because they'll have a losing trade here, and then their mind will think, oh, because I lost in that trade, no, this thing's got to go down, right? And some of them, they might even try and start trading to the short side, right? And completely go down a very common, okay, but not so good path. So be very mindful of that. So we had a chance of a re-entry, and of course, because it's come down to the longer term level, we can go for the higher reward to risk, at least up until this high point. So, you know, 2-to-1 reward to risk there at least. So again, a loser, a winner, but you're still net up, okay? So that's been good. We'll now look for some continuation. If we can get above this high point, then we'll just look for the next cycle formations to develop and look for that trend continuation, all right? And now if we look at the tools tab in terms of what's going on so far, the Asia session, we can see again a little bit of strength there in the US dollar, as we've highlighted, Aussie dollar as well. So we've got a bit of strength there in the Aussie overnight. And usually because we've just had a big sell-off on the Aussie, you know, there may be a chance of a bit of a relief rally, all right? Especially because the Kiwi's weak as well. The Aussie Kiwi exchange rate might get some flows positioning in the Oz. We can obviously Kiwi is the weakest one because of the news announcement we just had. The yen as well, relatively weak as well. We've been highlighting the yen. A lot of the yen pairs have been going up, okay? Not the cleanest of trends, but we have strength in the yen pair, so we are looking for some continuation there. It's actually why the market breakout strategy here on Aussie yen does become quite interesting, okay? So something I highlighted in the Asia session, we didn't get a lot of flows across the Asia session, but that's okay. But the trade from the London and Sydney trading floors that have been highlighted here is still valid, because on top of what Smart Charts is finding, we also have price action in the moving average zone, don't we? So this moving average zone that we can see buyers have actually turned up here before, so maybe there's a chance they could turn up here again today. We also have price at this angle of price here, this trend line where buyers have turned up before. Last time they turned up, drove it to a new high. So maybe there's a high probability chance of buyers turning up here again to keep driving it to new highs. So we have a confluence of areas here on why buyers may decide to turn up to the market again. So we'll keep an eye on this, okay? And this is a 4-hour chart. And if we do get some movement here, and to get a trend developing like we did here, then this will be then really good for your momentum strategies, phase changes of T-waves, fast time frame ones, pip runners and so on. But it all has to start off the bigger picture first to get the market sort of moving in a particular direction. So on top of highlighting the potential trading opportunity for you, Smart Charts will also do the most important work, which of course is risk management, because by pressing the buy icon here, populate an entry price at the blue dot, stop loss at the red dot, target the green dots. These can all be adjusted according to your own user preferences, of course. It'll do the risk management calculations for you as well. Really important to keep that risk low. Make sure you're able to deal with the random distributions of wins and losses that develop every day, every week, every month. And then we can also set an expiry. So in this instance, we'll give an end of day expiry, see if over the European session and US session, traders do want to get back into these risk-based trades. And the client will accept the trade here at the bottom. Now there are plenty of other trading opportunities developing across all asset classes on multiple different time frames. So make sure you're tuning into the live trading webinars happening today, help you to identify, participate in those trading opportunities. But in the meantime, that is it from me. All the best to your trading, and I'll see you next time.